Q1FY26 earnings conference call hosted by MUFG In Time Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. Before we begin with the main call, I would like to give a short disclaimer. This call may contain some forward-looking statements which are completely based upon our beliefs and expectations as of today. These statements are not to guarantee a future performance and involve unforeseen risks and uncertainties. With this, I would now like to hand over the conference over to Mr. Raj Chanderia for his opening remarks. Over to you, sir.
Okay, thank you very much, and welcome to our Q1 FY26 conference call. This evening, I'm joined by our CFO, Mr. Murad Moledina, and Ms. Payal Dave from our investor relations team. We will be presenting the performance for the first quarter ended June 25. So I'm sure most of you would have attended the Aegis Vopak Terminals Limited (AVTL) maiden earnings call earlier this afternoon. We are pleased to share that our subsidiary AVTL was successfully listed in June 2025. Aegis Logistics continues to hold 44.71% equity in AVTL, and it's important to note that given Aegis Logistics management control over the company, AVTL financials continue to be consolidated into Aegis Logistics financial statements. So before we dive into the business overview, I'm just pleased to announce that our ESG rating from MSCI has been upgraded from A to AA in this calendar year. Now, there are several developments underway at Aegis that we'd like to explain in greater detail. Perhaps I can go port by port. As far as Mumbai Port is concerned, and Aegis continues to own and operate our assets in Mumbai Port. The liquid storage capacity at Mumbai Port is 275,000 kiloliters, and the LPG static capacity is 21,000 metric tons. Now, we also have an upcoming liquid capacity of 125,000 kiloliters, 50% of which is expected to be operational in the ensuing quarter, and the balance by the end of this fiscal year. This project of roughly 250 crores was announced in the last fiscal year. In the JNPT port, during the past year, we added a terminal with a total storage capacity of approximately 102,000 kiloliters for liquid products, and we have been allotted an additional 30 acres of land at this port, on which a capital expenditure project of 1,675 crores is being set up for liquids, LPG, as well as an LPG bottling plant. And this project is now officially underway. As far as Kandla Port is concerned, the existing facilities at Kandla are operating with an improved utilization, and this asset will see a jump in the volumes with the operationalization of the KGPL and JLPL pipelines, which is expected in the second quarter of this financial year, to which we are connected to both of these pipelines. Another positive initiative at this port is that finally VLGCs will start working at Kandla Port, which will also benefit the operations, and as we shall be able to unload larger sized cargoes. In Kandla, we have acquired an additional plot of land, which we are calling CRL4, where a liquid terminal capacity with a capacity of about 94,148 cubic meters will be set up, and this is expected to come into operation next year. As we had announced earlier, we are expanding our footprint in the ammonia terminaling business. In addition to the terminal at Pipavav, which we had already announced. but I'm pleased to state that a non-binding memorandum of understanding with Larsen & Toubro, L&T, has been signed up to set up ammonia terminals at Kandla for their upcoming green ammonia manufacturing facility at Kandla. As far as Kochi is concerned, the liquid capacity at Kochi is operating at a higher utilization, and further capacity will come up in the near future at the additional land that we have been allotted at this port. At Pipavav, the LPG capacity with 48,000 metric tons of static cryogenic capacity has been added last month, and with this expansion, the total LPG terminal static capacity at Pipavav has reached 70,800 metric tons. The liquid terminal at Pipavav is progressing well with a higher utilization, and in future it is our intention to set up a rail gantry for evacuation of liquid products as well, similar to the one that we have for gas. India's first independent ammonia terminal at Pipavav, of course, as I mentioned, is being set up with a static capacity of 36,000 metric tons. And this project is expected to be completed before the first quarter of the next fiscal year. And this ammonia terminal has a take-or-pay contract for 15 years to service the upcoming DAP plant of Hindustan Zinc in Kandla. At Mangalore Port, we added the cryogenic LPG storage terminal with an 82,000 metric ton static capacity last month, and the first vessel was welcomed last month with the inauguration of the LPG loading arm, which made its first pilot discharge. This was a flawless operation. And further capacity in the liquid side will be set up in the near future in this port, as we have been allotted some additional land. At Haldia, the liquids capacity is operating at a higher utilization. We participated in various tenders to get additional land at Haldia to expand our capacity, and the Haldia LPG terminal continues to do well and increase its utilization slowly and steadily. And we are looking to extend our presence to a seventh port, and once we are allotted some land, at the moment we're not able to disclose where we are bidding, but once we are allotted some land, we will of course be able to set up some additional capacity in the liquid side there soon, and we will be informing everybody at that time. So in summary, Aegis possesses really strong, which we have demonstrated, in-house expertise in identifying opportunities and executing infrastructure projects that are cost-effective, fast and flexible, while at the same time maintaining the highest quality standards that ensure the long-term durability of these assets. And we've also constructed them at the lowest cost per designated number of throughput turns. All these projects are housed and operated under Aegis Vopak Terminals Limited, and we will already reach a capex of $1.2 billion by the end of next year, and we expect to reach $5 billion aggregate capex by 2030, which would be funded by a mix of internal accruals and utilization of debt, with a debt gearing ratio, prudent debt gearing ratio of 0.6 times, capped to a 3.5 times of EBITDA. With the recently concluded phase 1 equity infusion by way of the IPO, as you know, we are legally obliged to have a phase 2 equity infusion within the next 3 years under the SEBI regulations. The capex, therefore, will be largely funded. Coming to the distribution side, this is of course a key focus for us as we utilize our existing terminaling facilities and infrastructure to reach the end customers. In the case of LPG, we manage the entire value chain, from sourcing, storage to distribution across India. And since distribution is a B2C segment, it offers significantly higher earnings per ton compared to our other segments, while requiring relatively little investment. We distribute LPG directly to industrial customers and also through our partners to serve both existing and new customers in the retail segment, especially with auto LPG stations, where we can cross-sell other products. I'm really pleased to announce that we have just signed a
Ladies and gentlemen, the line for the management is disconnected. Please hold while we reconnect them again. Ladies and gentlemen, thank you for being on hold. The line for the management is now reconnected. Thank you, and over to you, sir.
Thank you. Sorry about that. Yeah, so I'm pleased, in case you missed it, I'm really pleased to announce that we have just signed a cross-selling of fuel agreement with GOBP, which I think really could be a very interesting development for our distribution business. So I've just provided you a detailed port-by-port update on each of the terminals, and really just to summarize, before I hand over, there are numerous investment opportunities across our businesses and the related segments. Aegis has very strong cash reserves, a robust balance sheet, which is positioning us well for future growth. And our management team is actively evaluating multiple projects that align with our internal IRR benchmarks. And with now AVTL now being listed, we recognize our responsibility to shareholders has doubled, and we are committed to delivering long-term value to all stakeholders. So with that, I'll conclude and hand over to our Chief Financial Officer, Mr. Murad Moledina, to present the quarterly financial highlights. Murad?
Yeah, thank you. Now, before we get into the financials, I'd like to briefly explain the rationale behind the AVTL's IPO. The primary objective was to reduce debt and strengthen the balance sheet, enabling us to seize future growth opportunities and continue our Gati strategy. For Aegis Logistics, the IPO has been EPS accretive, where now a portion of the profit will be shared with minority shareholders. However, the returns generated from reinvesting the proceeds will more than compensate for this. Coming to the operational parameters of the business, both the Aegis segments, LP gas and liquids, performed as per our expectations in the first quarter of FY26. Q1FY26 normalized EBITDA stood at 256 crores, an increase of 2% year-on-year. Profit after tax increased by 11% to 175 crore for the first quarter this year versus 158 crore in Q1 of FY25. Now, coming on to the individual segments, liquid Q1 FY26 revenue from liquid segment stood at 144 crore compared to 143 crores a year earlier, increase of 1%. We delivered a stable Q1 EBITDA of 106 crores in liquid. LPG business Q1 FY26 EBITDA was 150 crore as compared to 142 crore in Q1 FY25, an increase of 6% YOY. Revenue from LPG business stood at 1,575 crore, achieving an 8% YOY growth. Now, volume details. Throughput revenue in Q1 FY26, the LPG volume handled at all our terminal was 1.16 million tons versus 1.01 million metric tons in Q1 FY25, an increase of 15%. The distribution volumes of auto, commercial and industrial bulk handled was 1.45 lakh metric tons in Q1 FY26 against 1.28 lakh metric tons in Q1 FY25. The sales volume of sourcing was 1.19 lakh metric tons versus 1.24 lakh metric ton in the same quarter last year. The financial position of the company remained robust with low debt, strong cash flow and a solid balance sheet. We achieved the highest liquid revenue in Q1 ever. We also achieved highest gas EBITDA in Q1 ever, and we also achieved highest throughput in Q1 LPG throughput volume ever. So we continue to do many firsts all the time. And with this, I hand over this line to the moderator to start the question and answer session. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Julian from Amiral Gestion. Please go ahead.
Hello, am I audible?
Yes,
please.
No, thank you for the opportunity to ask a question. I have a few questions. Maybe first, could you just talk about your liquid revenue and margin, maybe on a sequential basis, because it did come down quite significant, maybe from fourth quarter of last year to this year.
Mr.
Maybe
Julian, your voice is not very clear.
Sorry, can you hear me? No, just about the liquid segment from fourth quarter to first quarter this year. Why did the revenue decline so much, and also the margins?
No, we're sorry, Julian, we can't hear you properly.
Mr. Julian, we can't hear you properly.
Hello, is this better?
Yes, it's better. Please continue.
No, I was just asking about liquid. Maybe on a sequential basis, from fourth quarter to first quarter, why did the revenue and margins decline so much?
Liquid.
In liquids. June, every time Q1 is always a little softer. And like I said, we have achieved the highest ever liquid revenue lifetime, what we have done in Q1. So we are okay as far as liquid is concerned. And from ensuing quarters, you will see as the product mix improves in the newly commissioned liquid terminals, we would be doing better as the year progresses.
So maybe for this year's fourth quarter, should we also expect like a seasonal increase in liquids revenue and margins?
We historically is Q1 and Q2 is softer than Q3 and Q4, and of course capacities added also makes a difference, and a change of product mix. So if you look at all together, then you will be able to gauge correctly what happens in the ensuing quarters.
Okay. Maybe the same question pertains to the margins for gas distribution. I mean, if I would just do like a back calculate estimate of the margins on the EBITDA per ton, gas distribution actually declined on the Q-on-Q basis. Any color on that?
Yeah. So distribution margins, please look at on a yearly basis. They are generally around 3,000 rupees. Last year we clocked 3,500. This year also we expect to be around the same. So on an average, we will always end at around 3,000 to 3,500 rupees per ton. Currently in Q1, we have done around 2,500 rupees. You will see there has been a push on volumes because we have entered new geography on account of our upcoming Mangalore terminal. We are now pushing, and that has averaged out the margins a bit. But we are confident that we will again end between 3 to 3,500 per metric ton. On a yearly basis, you will of course see a better volume growth as compared to the last year, which we have always said in the previous year that in the current year, on account of 2 cryogenic terminals coming up and a new geography, we will see better volumes, margins. Like I said, we should be able to achieve what we did last year on an average. So we should be better off in distribution business this year, back on track.
Okay, maybe just one last question. On JNPT, as I understand, actually one of our competition has announced a LPG terminal, and I think they have started construction in February this year. So with that in mind, do we anticipate like a overcapacity situation over there? Are there any assumptions on their capacity build? Because after all, I think if you were to combine the 2 capacities that we have announced and the peer has announced, then you don't really, there seems to be a lot of capacity in JNPT. I don't know, any color on that?
Yes, so JNPA, you please keep in mind that there are 2 partners involved in the JNPA infrastructure which we are setting up, Aegis and Vopak. Both are very experienced infrastructure players in storage business. One a leader in India and one world over. We have examined all the macro market conditions, competition, everything, and after having confidence in all the parameters, we have decided to go ahead. Another thing which you can note is that the so-called LPG infrastructure that you have referred to, there are news items saying that BW has, of course, withdrawn from. So we don't know the fate of that particular infrastructure. In spite of that, like I said, we do our own calculations and we are confident of what we are doing at JNPA. We expect good and solid utilization going forward. As far as JNPA is concerned, it's in Western India and near to the high consumption north of India.
Thank you. The next question is from the line of Abhishek Jain from Alpha Accurate Advisors. Please go ahead.
Thanks for the opportunity and congrats for the set of numbers, sir. Sir, you have added 2 capacity. One is the Bangalore and another is the Pipavav ports. So after adding these 2 capacity, what would be the total throughput capacity right now? Versus in FY25, it was 960.
So we don't give outlook on the throughput that we are going to achieve, but please keep in mind that what we have always said, and the only guidance that we have given is that we strive for a 25% CAGR growth in our EPS year on year. That's the bare minimum that we try. I think from last 3 years, probably we have done around 23% or CAGR growth.
And what would be the increase in static capacity, sir?
Static capacity put up in Mangalore is 82,000 metric ton, equivalent to around 6 million tons of throughput capacity, and Pipavav is 48,000 metric tons, which would be wherein we would be able to do a 4 million kind of throughput.
So that means that your total static capacity will increase by the 1.1 times. And the same line growth can be possible in the throughput capacity.
In the throughput utilization, you're prorating it, yeah.
Yes, sir.
How it happens is that every new terminal, so you are combining a matured terminal which is operating for years along with a new terminal. You cannot do that. Every new terminal, we have always said, a gas terminal takes usually is built with a capacity that should last the customer for 5-7 years. So it starts with a 25-30% utilization, then scales up, and in 5-7 years you then see almost close to 100% utilization. The life of the asset, both of liquid and gas, is 40 years, a very long life, and the utilization I've just explained how it happens.
So that means we can assume that 25% kind of the volume growth, CAGR growth in a gas segment, sir?
Yeah, typically that's how it happens.
And what was the throughput capacity and utilization in the first quarter, sir, in LPG segment?
Throughput we did 1.16 million tons, right?
1.16 million.
Yep.
And utilization, sir?
Sorry?
Utilization?
Utilization we don't do like that. So okay, before we did before these two cryogenic terminals in Aegis, we had a capacity of 9.6 million tons. So you can do the.
Okay.
And this is quarterly 1.16, mind you.
Okay, and this quarter we did not get any benefit of this incremental capacity. We get the benefit from the quarter second only.
Yes, you are right.
And one bookkeeping question was that if you see the average realization in the liquid division and EBITDA per ton in the gas sector, that was very high in the Q4 versus in this quarter. Was there any one-offs in fourth quarter, sir?
So sometimes you get take or pay contracts and you earn money. So those, I cannot say they are one-off, they could repeat, but they do come once in a while.
These are because of that you have completed two terminal in the last quarter, Bangalore and the Pipavav, and got the revenue.
No, yeah. So last quarter the revenues and per CBM rate might be higher because we get sometimes contracts which are contracted but not utilized. So you get those revenues. They, like I said, we cannot say it's one-off, but it's once in a while. It does come.
So can you give that number, sir? How much it was?
Oh, I don't have it. We don't keep a track of all of that. So you have to take it together. But if you look at the yearly realization in liquid, they are always around 3,000 rupees per CBM. That is how it comes on an average.
Okay, sir. Thank you, sir.
So look at the yearly realizations rather than go quarter to quarter. They even out, balance out.
Okay.
Thank you. The next question is from the line of Yash Nandwani from IIFL Capital. Please go ahead.
Hello.
Yes,
no,
yes.
can you please be a little louder?
Yeah. Thanks for the opportunity, sir. So my first question is on the distribution segment. So one of the city gas distribution company has recently announced its entry into the propane and LPG marketing, and they in the Morbi as well as other industrial clusters, and they are targeting 25% market share. So how do you see this impacting our distribution business?
So you should be happy. I'm sorry, there's an echo. Hello, can you hear me?
Yes.
Hello. Yep. Hello. Yeah. So you should be happy that finally what we have been saying over a number of years is happening, that you will find a city gas, natural gas player wanting to get into LPG business. The more the merrier. That's what I always believe. And probably they would come, they don't have their own terminals. So probably they would be coming to store at our terminals only. Because you need terminals to be able to trade, and at the end of the day, they are going to trade. And mind you, we have partners who are global leaders like Itochu with us, and let's see. And there are so many other companies who do trade in LPG. All the NOCs, us, SHV, Total, Confidence. There are so many of them. We compete and we sell, and we have the advantage of being vertically integrated in LPG business. We source, store, distribute all ourselves. So we capture the entire value chain as such, which may not be there with others.
Sure, sir. And sir, secondly, apart from the expansions already announced in AVTL, do you plan to enter any new terminal or have any product or service in this company in near future?
Yes, please understand. Again, it's echoing. Hello. Yes, please understand. Aegis Logistics Limited is a consolidated financial statement that we are talking about. It's inclusive of AVTL. It does not exclude AVTL. So all of the capex of AVTL are included line by line into this company. So it's inclusive of whatever Aegis Vopak will house. So it's like we have Mumbai Terminal number 2 housed in Sea Lord. We have our packed cylinder business housed in Aegis Gas. We have liquid and LPG terminal housed in Aegis Vopak. So all of these get combined and consolidated. So Aegis Logistics is a whole. Is what includes everything. And like we have said, in addition to 2,500 crore projects that we are doing, which will be housed in Aegis Vopak, another 250 crore of Mumbai expansion in liquid will be housed in our parent individual standalone company. But we will be inclusive of all of it.
Sure, sir. So that means if you enter any new product, let's say hydrogen, that will be housed in Aegis Vopak only.
Hydrogen
or any other sort of product, sir.
Yes. I'm sorry, there's some problem with the system. There is an echo. Let me say this way, that as and when the opportunity comes, in any new energy, any new port, or any other infrastructure, the company will decide whether it falls within our benchmark returns that we expect, and secondly, then we'll decide where housed it will bring the maximum value. It also depends on whether there are partners in those opportunities. So it will be done as the opportunity will call for, so it depends. But yes, most of the standard port terminals will be housed under the strategic Gati in Aegis Vopak, for sure.
If I can just add here, I think the classic example is ammonia, right? That would be an example, just like 18 months ago when we first announced that we were getting into the ammonia business. So today, that is a reality. The first ammonia terminal is under construction. The second ammonia terminal I just announced in the call in Kandla with L&T and so on. So new opportunities like ammonia will come, and when they do come, we will assess where to house them correctly.
Sure, sir. Thanks a lot.
Thank you. The next question is from the line of Neel Otpal Sahu from JM Financial. Please go ahead.
Hi, sir. Good afternoon. Am I audible?
Yes.
Thank you. So two questions from my end. First of all, is the Haldia LPG terminal going to be included in AVTL?
Yeah, I wish I knew the answer. So it all depends on we continuously keep reviewing all our assets, and like Mr. Raj just said, where housed would bring maximum value. So it depends. As of today, there's nothing more to speak about on this. But never say no to anything. We are always assessing, reviewing, and looking at what brings maximum value to the group. That's it.
Okay, sir. And second question, can you give us a ballpark differential of what is the price differential between propane and natural gas for the industrial clusters in Morbi?
I think as of today it stands at around 16%. If you look at electricity, it is 53%. If you look at, so it depends on each fuel, but NG, Morbi, I think it's 16%.
In favor of propane.
In favor of propane. That's what. So generally, it's always 15% or so. That's what it is.
Okay, sir. Thank you, sir, for my question.
Thank you. A reminder to all participants, you may press star and one to ask a question. The next question is from the line of Harsh Shah from Dalal and Broacha. Please go ahead.
Yeah, thanks for the opportunity. A few questions from my side. So firstly, on the announcement that the company made on 19th of June with respect to various business transfer agreements which the company has kind of signed between the subsidiaries, right? So just wanted to check here, I mean, how is the accounting treatment done in terms of, say, when you say are doing a slump sale from C-Lot containers to AVTL, right? So I mean, how is it accounted in the books of the holding company? Like you said in the AVTL, right, the gain on the transfer of assets is recorded in other comprehensive income, right? So I mean, is it going to impact? So yeah.
We will need a session, a whole day session to completely talk on consolidation. It's a complex subject. But to say it in a very simple manner, when you consolidate all of this, the profits are eliminated. So in the profit and loss account, the profits will not appear. That's what the accounting standard requires. But if you look at the individual companies, you will see those profits. For example, the Mangalore terminal which we transferred will be reflected in the C-Lot Containers Limited, which is a 100% subsidiary of Aegis Logistics Limited standalone. And there, in C-Lot, you will see the profit reflecting on sale of the whole asset to AVTL. Now, when we consolidate, that profit is going to get eliminated on consolidated basis. It is not that when the subsidiary earns something, the standalone holding company will also reflect that. It cannot be so, because that's how accounting is done. It is only aggregated on a consolidated basis, but there the requirement of law is that you don't need to reflect or actually show the profit, because they have come from the companies you control or those that are your subsidiaries, so they get eliminated.
Correct. No, I get the point of consolidation. I just wanted to check. So, if, for example, C-Lot is transferring, so when you are doing accounting for C-Lot, so is it that profit is reflected within other income? Is it that case, or how is it?
Yeah, only when it is sold, income minus expense, that's the profit.
No. So I get that. So it's reflected in other income. So from where I'm coming is that if I look at the base quarter, right, the standalone operation of Aegis Logistics, there is an other income of 153 odd crores, right? So that is where I'm trying to understand how the other income in the base quarter is so high.
Oh, you're talking about standalone. No, we discuss here only consolidated. Standalone would be interest income. Other income will include even interest received.
Okay.
So probably it is because of interest received. You have a very large cash balance of around 4,130 crore as of 30th June. So you can look at 7% per annum is 290 crore, divided by 4 would be somewhere around 80-90 crore would be interest received only.
No. So I get the point, the calculation, but anything specific.
Can you hear me? Your voice is not really clear. Can you please check what's
wrong? Is it better now? Yeah, is it better?
Can you continue?
Yeah,
it's better.
So basically what I was trying to understand is in the base quarter, 153 crores of other income. So is there any portion wherein any asset which may have been created or built by Aegis Logistics has been transferred and that is getting reflected in other income, or is it just the, as you said, the interest and all
in the quarter, Aegis Logistics has not transferred any asset. It is C-Lot that has done so.
Yeah. Got it.
Okay.
No, so got it. Okay. Sure. And also, we have to take it post the call only for the accounting treatment. Yeah, for now that's it from my side. Thanks.
Thank you. The next question is from the line of Abhishek Jain from Alpha Accurate Advisors. Please go ahead.
Thanks for the opportunity again. Sir, why the average realization per CBM basis used to be higher in the fourth quarter in liquid division? As you mentioned that it is average around 300 rupees CBM per month, but if we see the number in first quarter for 26, it is around 223 to 24, and earlier quarter also, except fourth quarter, it is used to be 224 to 230 rupees per month basis. So just wanted to understand the math.
So what I said was 3,000 rupees per year, not 300 rupees per month. So if you translate 3,000 rupees per year, it comes to 250 rupees. If we have done 225 rupees in Q1, I'm sure the average by year end would again come back to 250 rupees, which is generally the standard benchmark we look at.
So last quarter 398 includes also lot of one-off.
You have to look at yearly average. Yep.
Okay, got it. And so on the gas EBITDA, it is usually around 1,560 rupees. It is usually to be at 1,280 to 1,300 per ton basis. What would be the average EBITDA per ton guidance going ahead, sir?
So it is generally 1,000 rupees per ton EBITDA margin in case of LPG.
1,000 rupees.
Yep.
But this time it is around 1,290, and earlier also it was in the range of 1,270 to 1,280 rupees.
So it is like this, that in case if, for example, in some of the ports we get a higher revenue rate, and also the EBITDA is higher. So if the throughput increases in that particular port, the average, but again, over the whole year, it will balance out, and you will see generally 1,000 to 1,100 rupees max is what will be the EBITDA per ton in case of throughput of LPG.
Okay, sir. And as you mentioned that around 20% volume growth expected in the gas division. So just wanted to understand what is your outlook for the liquid division, sir? How the revenue trajectory will improve because of this addition of GNPT capacity?
No, we do not. For example, I have never said 20% growth in throughput, which is we don't give outlook both in gas and liquid. How we have to generally look at is, again I repeat, the CBM, that the capacity in liquid that we have, 3,000 rupees is what would be generally the revenue rate, and then you have to take 2,000 rupees per CBM in liquid as the EBITDA margin, and you can work for yourself looking at the capacity growth that the liquid will have during the year. If we achieve something more than that, we are doing good. And in case of LPG, as we have said, that the revenue rate, like you have said, is 1,250 rupees per ton, and the EBITDA rate is 1,100 rupees per ton, 1,000 to 1,100 EBITDA margin rate. And in case there is a new capacity coming up, it generally starts with a 25% utilization and then scales up. The terminals which are 5-7 years old, probably 7 years old, then you will find those terminals being utilized almost 75 to 100%. So accordingly, then you have to work out your maths.
Thank you, sir. That's very useful. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Vishal Mehta from IIFL Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity again. I think going forward, probably we can look at combining the calls for both the entities. But just taking forward, the discussion on that accounting treatment, just one clarification that I needed. In the books of AVTL, the capex that will be recorded would be cost to the group plus margin. And in the consolidated group, it will all get eliminated, and the capex that will be recorded would be just the cost to the group, right? So
perfect. But I would just like to reword it. In AVTL, it will be accounted the cost will be accounted what it has paid for, which is what you have described it differently, but it amounts to the same thing. And in consolidated, whatever margin the holding company charges will be eliminated, and it will be shown net of that margin.
Okay. Cool. Thanks. That was the only question. All the best.
Thank you. The next question is from the line of Amit Vora from the Homeopathic Clinic. Please go ahead.
Yeah. Hi, good afternoon, everyone. My question is again accounting related only. If Aegis Vopak has a 48 crore June 25 net profit, the complete net profit is reflected in Aegis Logistics also, or the cash flow, or some other component?
I'm sorry, I was not able to clearly hear your
No, can't hear you properly.
Just a minute, just hold on. Hello? Am I audible now?
better.
Yes, much better.
Yeah. So my question was, if Aegis it's again accounting related. If Aegis Vopak had made a profit of 48 crores in this current quarter, June 25, the complete 48 crores is reflected in Aegis Logistics, or the cash flow component, or some other component?
No, the complete profit is reflected except intercompany transactions are eliminated. So the complete, but it won't affect the profit as such. So it's line by line consolidation, and all the profits will get embedded. Then whatever is the minority interest in the consolidation of Aegis will be shown as a deduction after PAT. So it will come before EPS. That's minority interest.
Got it. Thank you so much. My question is answered. Thank you.
Thank you. The next question is from the line of Vinit Jain from Siddh Capital. Please go ahead.
Yeah, thank you, sir. My question is regarding the distribution volumes, which we have seen traction after, say, 5 to 6 quarters. So how do you see the growth trajectory here going ahead? And will you be able to give us some kind of a color, how much has the volume come from Mangalore in the recent quarter? And how is the competition shaping up at Morbi?
I may not be able to give you territory-wise breakup, including Mangalore, but I can tell you for sure that we will see an upside in this year as compared to the previous year. Previous year was a showdown between NG and propane. Now the dust has settled, and we are also moving into new geography. New capacities have come. We will see a good, healthy growth in the current year, which is well reflected in the Q1, which is generally soft, where we have seen a 13-14% increase in the distribution volume already. So we expect to end the year good as far as distribution volumes are concerned. And like I said earlier, try and retain the margins.
So, but you concur that this quarter has some volumes from Mangalore, right?
Oh, it's not Mangalore terminal has not started. So, but we are, pushing into that market. Yeah.
Okay. So, and then we are sitting on a large pile of cash. So, what are the other growth opportunities we are seeing apart from? So, already you have mentioned that major projects are going to be parked into the JV. So, ex-JV, what are the other growth prospects the company has?
There is nothing like major project housed in the JV or not. Like we have said, every opportunity is to be seen in isolation, and then decisions have to be taken based on a lot of factors. There could be multiple scenarios. There could be a scenario where Aegis standalone and AVTL together is investing in an asset. There could be a scenario where we are investing both of us together along with a partner. There could be a scenario where Aegis Vopak is doing on its own. There could be a scenario where Aegis Logistics is doing it on its own. So there are multiple variables and multiple ways in which infrastructure can be structured. The opportunities are coming thick and fast. They are becoming bigger and bigger. And I think whatever cash we may have will not suffice for the kind of growth that we are looking at. $5 billion by 29-30 is a tall order, and we will need every cash that we can lay our hands on, whether in holding company or whether in subsidiary, or whether through a partner, or whether equity infusion or debt, whatever. We will need it all to be able to carry on our strategy of Gati, which is becoming a gateway access to India for all liquid and gas products, and including imports, exports, coastal movement, all of it. So yeah.
If I can just add that our having a strong cash balance and a very strong balance sheet has been a basic philosophy of the company for the last 15 years, and it gives us the flexibility to move fast on acquisitions, to move fast on projects, whether it's acquisition of land or even executing projects, which is I think why you're seeing such an amazingly fast rollout of all our terminals. So it is actually having that cash balance that really gives us that strength. So we intend to continue with that policy.
Okay. So one final question on the logistics part. We're seeing the volumes have been largely in the same range for last 4-5 quarters. There has been an upside of 10% and above. But with the new 2 facilities coming, should the traction be much higher in the next few quarters, or how do you see that? Or do you think it is only going to move much when the KGPL pipeline is commissioned?
I think both, even without the hookup and but the commissioning of new capacities, you will see an upside. We have already said that every quarter we are clocking a lifetime high on several fronts. So this quarter also we did the highest throughput ever that we have done in any Q1 historically. And yes, 10%, 15, we have done 15% higher than YOY, right? That's a very healthy upside, and with the increased capacity, we will see further increase in the ensuing quarters. And when the hookup happens, and when those pipelines, Central India pipelines, those get operational, we will see even more. So this year going to be good and very healthy upside as far as throughput is concerned.
I think just if I can just add that as I mentioned in the earlier my comments, the other assets that we are adding, strategic assets like, for example, the railway gantries and so on. Some of you who have been following this company for some time may recall that at Pipavav, the moment we added the railway gantry, the business really accelerated, the volumes and so on. So in my remarks, I mentioned that we are going to be adding a railway gantry at Bangalore, right? Which would be coming up in the next. So we can't look every quarter necessarily at the but if you see the direction of travel, it's very clear that the throughputs are going to be going up quite a bit.
On the pipeline, KGPL pipeline, it was slated, some news items said it was slated to start by June, and there's again a delay. As well, there's another news item which says that Mundra Port wants to join into the pipeline. So what is the delay, and if you understand anything on that, please throw some color.
You can look up at the IHB website, and it says that they expect the commissioning of KGPL in Q2 of FY26. So probably by September is what they are aiming for. We have heard that the gassing up has already started, and Mundra hooking up into KGPL, it's a common user pipeline. We are also hooking up. Mundra will also hook up. IOC will also hook up. The pipeline throughput capacity is huge, 8.25 million in case of KGPL, and we have heard that JIPL also, PNGRB has now approved a step-by-step increase in capacity from 3.5 million to 6.25 million. So these pipelines will be the